Good morning. This is Dylan Jovine with Behind the Markets. Happy Thursday. Today is Thursday, August 28th. And last night was parent-teacher night. I got to meet my daughter's teachers at her high school, which was really interesting. And I'm actually happy with these people. Thank goodness. They believe in hard work, showing up, and they seem like pretty good teachers. Next week, I'll meet my son's teachers at his elementary school. So I'm excited about that. I really like getting involved in that kind of stuff. Anyway, today I'd like to talk about a lot of folks have been saying to me, hey, what do you think about this AI boom? People inherently know or intuitively know the market's overvalued. They know that it's, by many metrics, even more overvalued than it was during the dot-com boom. How do you stay sane in a time like this? How do you stay in the markets, but also not expose yourself where you really get hurt? And I'll tell you something, it's hard. What I've learned about investing in the 35 years of doing it is it's really basically a game against yourself. It's a game against your ability to govern your emotions and not to get caught up in the euphoria or the hype, to see past that. It's very challenging for a lot of people, and it was very challenging for me until I learned that this is a discipline and we have to be disciplined to be good at it. Look, what do I think about the AI boom? Look, I wrote some notes here. First of all, we all know the AI boom is probably going to destroy a lot of businesses, very much like the dot-com boom did in the 90s. But one of the interesting takeaways from the dot-com boom era and the networking boom era, frankly, the telecommunications boom, was that if you look at US real GDP in the 10 years before Netscape went public from 1987 to 1997, it was basically almost exactly the same US real GDP in the 10 years after Netscape went public from 97 to 2007. And this even includes not even accounting for the financial crisis. You have to remember something. When you get caught up in the euphoria, remember the math of the S&P, the math of it. Total S&P pre-tax income over the past 12 months was $2.5 trillion, according to Bloomberg. That's just pretty much where it's at. So, the question is, no matter what, that is what you're dealing with. Pre-tax income of about $2.5 trillion, and the speed at which that number grows will approximate the market value. Right now, the question is, will that grow at a rate that matches the growth in market cap? And it's not very likely, although the president's big, beautiful bill really has some benefits to it that make it likely that it'll stay jazzed up for some time. For example, in the big, beautiful bill, to spur job growth and capital investment, he allows for full expensing for new domestic factories, capital spending, R&D, et cetera. And when we also think about, one of the things I was thinking about last night is, as I'm drawing parallels between the AI boom, because we're certainly in the beginning of a bubble, maybe the middle, definitely, and it reminds me of the dot-com bubble. And the question really in my mind, is it 1997, 1998, or 1999? One of the things that a lot of folks forget is, and I wrote some notes here, when you get a major CapEx boom focused on physical tech assets, remember in the 90s, there was this fiber and internet build out in the 90s. Remember, all these companies were buying massive, were laying pipes, were laying lines, just spreading them out everywhere. It's a big deal. So you have this significant boost in earnings for the folks selling them, even though the underlying returns aren't quite there yet. So we're seeing that now with AI chips. And I think what's happening now with AI chips and the chip sellers in NVIDIAs of the world and the AMDs of the world, it's very similar to what happened during the telecom boom of the 90s. When you think about it, the Mag 7 are buying these chips as fast as they can. And the companies, they're buying these chips, and the companies selling them, so Mag 7's buying them, the company selling them, the NVIDIAs of the world, they're booking that spending as revenue and profit. And it reminds me of, remember, Lucent and Nortel back in the day? They did the same thing. So very much reminds me, NVIDIA reminds me, Cisco too, basically selling, it's like gold miners. They're selling the gold mining equipment for the gold miners. But the companies doing the spending, the Mag 7, like MCI and AT&T back in the 90s, they're the ones taking on the cost. And basically, they capitalize those expenses and spread the write-off over several years. But and this is very important, a chip they're buying could become obsolete in a year, 2 years, or 3 years, but it's being depreciated by some of these big hyperscalers in 5, 6, or even 7 years in some cases. And what that's doing is that's creating a huge boost to that corporate earnings number, that $2.5 trillion number that we've been talking about. But it's not sustainable. It's not sustainable. And it leads to write-downs later on. So there's a lot of funny things going on here. It's like when you're in the desert, you see an illusion. There's a lot of that happening right now. But look, right now, as I often say, you got to play the ball where it is, not where you want it to be. And right now, there's a bias, a bull bias in the market. There's just no two ways about that. Anybody who says differently is selling you something you just don't want to buy. So there's a bull bias in the market. By the way, I know plenty of guys who make their whole career by their perma bears. They're always yelling, it's a bear market, it's a bear market. The sky's falling, the sky's falling. They're like Chicken Littles. The sky's falling. Falling is the sky. And like a broken clock, it's right twice a day. These guys are right once a decade. And that's fine. But let me tell you something right now. I'm paranoid enough for all of us to keep my eye on this. But with interest rates heading down, where else do investors go? As I said yesterday, where do I go with my $10,000 that I have in 4% short-term money market funds? The only place to go, if the funds go down to 3%, what am I going to do with that money? That's the inflation rate, 2.8, 2.9%. So we're just treading water. So basically, the stock market, for better and for worse, is the only game in town right now. But yes, are we in a bubble? Sure. The only question is it the beginning, the middle, or the end of the bubble? And we will keep an eye on that as the next quarter unfolds and it turns into more of a show me the returns story. Anyway, that's all I have. Have a wonderful Thursday. I'll speak to you tomorrow.